This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora. Welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news American data is improving in a steady way without deficit or labour market stresses. So conditions seem right for monetary policy normalisation to be completed. First, American mortgage applications rose an unusual 3.9% last week from a week ago to be 14% lower than the same week a year ago. Pushing things along was a drop in the benchmark mortgage interest rate to under 6.9% from just over 7%. Meanwhile, US housing starts rose more than expected in June from May to be 4.4% lower than year-ago levels, but this is still a lowish level. Completions in June were unusually strong, adding to more availability. And American industrial production beat estimates too, rising 1.6% from a year ago, the biggest gain since November 2022. And the US Fed's Beige Book surveys paint a picture of modest expansion with some uneven variations across the Fed districts. It also confirms cooling inflation, but little labour market stress yet. And there was a well-supported but relatively small US Treasury 20-year bond auction earlier today, and that delivered a median yield of 4.41%. That is very little different to the 4.40% median yield at the prior equivalent event a month ago. Because US deficits are actually shrinking, and quite fast, the pressure is off this fundraising. More Fed officials are signalling that they're moving closer to a rate cut, and markets are starting to price that in. They seem to have beaten inflation without crashing their labour market. Normalisation can proceed now, it seems. In Japan, the Reuters Tankan Sentiment Index for the factory sector jumped to a plus 11 points in July from plus 6 points in June. It was the first rise in 4 months. Meanwhile, the index for the service sector cooled, reflecting a patchy economic outlook. The latest survey results come 2 weeks before the Bank of Japan's July policy meeting, where it could raise interest rates again and announce its bond purchase tapering plans. In China, which dominates the global rare earth minerals processing industry with its state-owned enterprises, it is finding it hard trading as prices sink sharply and losses pile up. And we should also note that China's rebar steel prices have slumped to 2017 levels, now just over half the level they were at the peak in 2021. And the World Trade Organization says China is backsliding on key reforms and lacks transparency on subsidies. They say China's secret subsidies could top $900 billion. Home building is at a low ebb in Australia, but the March results released yesterday suggest it picked up slightly in the first quarter. The US Treasury 10-year yield is now at 4.14% and down 3 basis points from yesterday. And the price of gold will start today down $9 from yesterday at $2,453 an ounce and now off its all-time record high. And oil prices are up $1 at just on $81.50 a barrel in the US, while the international Brent price is now just under $84.50 a barrel. And the Kiwi dollar starts today somewhat recovered at 60.7 US cents and up a quarter cent. Against the Aussie, we're up a half a cent at 90.3 Australian cents. Against the euro, we're unchanged at 55.5 euro cents. That all means our trade-weighted index starts today at 69.4 and up 10 basis points from this time yesterday. And the Bitcoin price starts today at $64,350 and virtually unchanged from this time yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.7%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.